Thank you. You are in the right place. Welcome to the Lloyds Bank British Business Excellence Awards ESG webinar this morning. If I could ask my panellists to pop their cameras on. Good morning. We'll just let everybody log in. In the meantime, I'll just give a quick introduction to myself and to the awards. So good morning, my name is Sarah Austin. I'm the founder and director of the Lloyds Bank British Business Excellence Awards. We are the UK's largest cross-sector business awards programme, truly a national programme that celebrates the very best of British business for businesses of all shapes and sizes. We have 17 different categories this year across various different disciplines and also business sizes. New to 2022, we have our ESG Champion of the Year, which is a truly fascinating subject, which I think that we are all, as each day passes, learning a lot about. I'm so pleased to say that we have a lot of experts around this virtual table today. We've launched these sessions, these webinars, as part of our programme to help educate and challenge these particular subjects, particularly for our SME, startup, smaller business audience, to help understand the subject further and utilise all of the opportunities that we have through the awards. So I'd like to introduce our chair for today, firstly, John Briggs, who is a host and broadcaster. And I'm sorry to say it, John, I will introduce you as the original voice of Apple iPhone Siri. So if you were wondering whilst you were listening, I've heard that voice before. That's where he's from. So over to you, John.
Does mean the whole bunch of Android users are going, really? I don't really care. Anyway, hello, welcome. Thank you very much indeed for being here today. The world has changed. Your people want to be part of something worthwhile. They want to get behind something that they believe in. Your customers and your investors expect you to behave ethically in how you treat people and the planet. It is not enough to turn a profit. You now have to make a difference. And if you want to deliver on the promise of your ESG, environmental, social and governance, if you have reached this webinar and you still don't know, and sustainability strategy, then change isn't just inevitable, it's going to be absolutely vital. And for truly successful ESG and sustainability transformation, you need to define your purpose, then you need to develop the skills, the talent, the leaders, and the culture that you need to achieve it. A mere bagatelle, something you can do in your lunch hour, of course, or not. And that is precisely what we're here to discover, and indeed why it is being talked about and not necessarily being seen through to the extremity of making it work for so many companies. We have with us from Lloyds Bank, Glenn, welcome, thank you very much indeed. Katrina from the Entrepreneurs Network, Alistair from Business in the Community, and our academic who will keep us on the right track as he studied this in depth from King's College London is Mark. Thank you all for joining us. I'm going to start, Mark, with you briefly because I know that you've got the insight into this as to this is for many companies a necessity because it is being demanded of them. It is also a nice to have. It is the right thing to do. But how many companies are actually pursuing this to the nth degree and making it work, involving an ESG policy and strategy that actually is working and providing them with the benefits that they have forecast are viable from this sort of strategy?
Very good question, John, to open with. Truthfully, the answer has to be, whilst we're all optimistic, and actually I think ESG is a crucial mechanism, as you pointed out, to make it work. I think the truthful answer is, as we sit here today, very, very few is the truth. And that's for a number of reasons. One is the subject itself is very, very complicated. It's what we frame as a super wicked problem. So wicked problems have no beginning and end. There isn't really a right or wrong answer. It depends which perspective you're taking. And they're very, very complicated with a lot of multiple things interacting. So if you think about the social side or the environmental side, they're very complicated things. And then they're made more problematic by the fact that the same people, i.e. all of us, are not only causing the problem, we're also meant to be responsible for solving it. And in the case of companies, that's exactly a real issue. And then it's all compounded really by two final things. One is the lack really of a global consensus that says this is the way to go. Now that's coming with regulation. Regulation starting, as I think we all know, in Europe particularly, but here in Britain, America, Japan, China, about 40 countries around the world. So I think that consensus is developing, and it's incorporating accounting standards, which are very, very important. But the final thing that I think is really preventing companies from really adopting this is what we call irrational discounting. So in economics, that's the idea that although we hear the logic of what's going to happen and we see it, and most of us now probably believe in the climate logic or the logic of inequality of wealth, we just can't stop ourselves doing what will benefit us in the short term over and above those long-term decisions. And that's a big problem.
Katrina, you're dealing with a lot of entrepreneurs who are seeing this from a different angle because they haven't started companies that now need to implement. They've started from a point of view of this being our core responsibility and strategy anyway. Is that an age thing?
I think potentially age has something to do with this. I mean, the next generation, millennials, consumers are very keen to purchase from companies that have an ESG strategy, and new companies that are being developed are kind of looking for those customers, and also are the same people. They are the new business leaders of the future, also have that as a central ideal. So potentially it's an age thing, but I also think it is kind of the cold hard business logic of, well, what do the consumers want and what am I going to supply to them?
And Sarah, you're not just here as obviously the leader of the British Business Excellence Award, but you also have your own small company as well. But for you, how does this strategy do you get involved with it? How does it form part of your business, or does it?
I mean, my business model is quite unique, I would say. I think that a lot of the challenge is simply just educating someone like myself when you're launching a business that actually eventually this will help the bottom line. I'm lucky enough to be able to join people like yourselves and work with Lloyds Bank to know that. But if I didn't have that opportunity, I'm hasten to admit that I probably wouldn't have it at the top of my to-do list to ensure that it, that it's going to help my bottom line. When you simply Google ESG, there's lots of talk about ESG investments, making the right ESG, when you're looking at a company. I'm not interested in that at the moment, whilst I'm launching my business and I'm up in the middle of the night worrying about how I'm going to make everything work and break even. So I think it really does come down to education and getting the message out there to the right networks. Because being an entrepreneur in particular, it can be a lonely place. So you don't necessarily know where to look as well.
Alistair, is that your experience of smaller businesses coming to you going, we haven't got a clue where we start?
Sort of. So I think we see both in terms of the businesses that come to business in the community. Absolutely, there are the smaller, medium-sized organisations that aren't centred around a purpose or fixing some problem in society, and absolutely they do struggle to understand sort of such a broad agenda. Where do I start? How do I help? The second set, though, are the organisations that are built around solving a societal problem that are, as Katrina was saying, they're sort of really innately purposeful or purpose-driven startups, and they come from a very, very different place. I think it's worth sort of dividing the two. The other part, I would say, I completely agree, Sarah, with your point around education, and I think it's incumbent on organisations like ours and government and what have you to share as much information through those various networks. But it's also down to larger businesses who work with smaller organisations in their supply chain or in their value chain somewhere else. Those large organisations have got the resources. They should be doing a lot of that heavy lifting to make sure that they are educated and they are either mandating or supporting or accelerating that journey across the organisations that they're working with. I know that Lloyds Bank do quite a lot of work in that space, it's just kind of one example.
Well, Glenn, at this point, is this about how much money companies need to be able to create a strategy and then implement it? And how do you help them? How can you get involved?
Yeah, so I'll probably just go back to what Sarah and Katrina were talking about. So money is definitely an access to funding to have a strategy and have a commitment, or have some people in the business that have some time, frankly, and some headspace to think about ESG on top of all the other things that a small and medium-sized businesses have to think about. I think Sarah was just talking about her own business. But it's I don't think many people on this call will take too much convincing, but we've just managed through a pandemic and still managing through that pandemic. Things like labor supply issues, supply chain disruption, inflation, and ESG has been a topic before all of those and will continue to be a topic. And of course, the planet keeps warming up. So it's not an either or conversation for me. It's another huge global macro complex problem that Mark talks about to wrestle with. And clearly financing, which is what Lloyds Bank does, whether it's through our green lending, through our clean growth financing, I mean, that's a clear way that we can support businesses on their own growth journeys. But capital and resources and people to begin to think about this and make some commitments and some plans around it. Our research that we undertook last year across a whole range of SME size clients, not just Lloyds clients, showed us that 50% of clients of the smaller end have not yet committed to any form of plan. So they're increasingly aware, which is good, and I think that's off the back of things like COP and the latest IPCC report. But knowing where to start, I think, is a really sort of challenging question for many SME sized businesses on this topic.
If you have just joined us and you are watching the live version of this webinar, you are welcome to ask questions of our panelists yourselves. You simply do it via the chat section and pose your question there, and I shall keep an eye out for them. If, however, you're watching the recorded version, I'm afraid that's not going to be possible unless there's a bit of time travel involved. And that means, therefore, you should have turned up for the live version, really, shouldn't you? So keep an eye out for the next webinar that comes your way. And Mark, I'm going to come back to you then, having set the scene here. One of the biggest problems is that not all ESG factors are actually quantifiable. Current corporate sustainability disclosure focuses largely on process and procedures and not on actual performance. Isn't that the case? And how do we change that?
Absolutely. Yes, a lot of organizations that are involved in this wider ESG. But I think if we just go back a little bit, John, if I may, I think we need to think about this. Is unfortunate. It's been around roughly about 15 years, since 2004, this concept. And in the intervening period, a lot of different organizations, voluntary, not-for-profit, for-profit, all different kinds of things have grown up. And unfortunately, most of them have invented their own methodologies. So you've ended up with a real hodgepodge, frankly. It's a quilt of standards, ratings, principles, scores, you name it, it's all in there. It's a real soup, it's a real muddle. And that's why you've got all this new regulation coming. It's trying to sort out the muddle. And one of the problems that the muddle has created is that it's, frankly, allowed for what's called greenwashing. And that is, I think, what your question is going towards. That is the policy of saying, effectively, that you're doing more than you actually are. So this is the danger of approving and certifying companies that say, I've got a, I mean, pretty much every company of any size in the country has, for instance, a gender pay gap policy. They kind of have to by law, right? But I guarantee you, there's hardly any companies in the country who don't have a gender pay gap. So having a policy is, as you quite rightly point out, is a million miles from actually doing it. And unfortunately, greenwashing is the practice of saying I'm doing it without actually doing it. And that's rife, absolutely rife. And that is hugely in answer to Katrina's very well put, the cold hard logic of giving the consumers and the customers what they want. So we know they need this. We're not quite doing it, but we'll say we are. It's kind of that simple. And that needs to be stamped out. And that's what the regulation is doing. Every regulator has pointedly said, using different words, it is to combat greenwashing, to counter greenwashing, to etc. I don't know, Glenn, I'd be interested to know if small businesses are aware of the regulations that are coming and the fact that they have to answer up these investor and supply chains. I don't know if they're aware of that.
Glenn.
Yeah, so 2 points on greenwashing. I mean, it's absolutely a huge risk, on top of a topic that's so complicated. People are struggling to understand what the E, the S and the G mean. So I definitely think this is talking about upping the number of times that we talk about the G in governance, and being able to measure. So you know, if I just go back a little bit, you know, the challenge for SMEs is to really understand, for example, from the sustainability perspective, how much carbon they're actually generating in their business, to be able to have a plan, quite frankly, to be able to do something about it. If you move on to the S, of course, you know, understanding your social impact, whether it's inclusion, you know, pay, you know, gender pay gap, etc. You know, ethnicity in the business, you know, something that's, you know, Lloyds have made some very public commitments around our own business. So, you know, having some governance, and I guess if you're a large business like Lloyds Banking Group and you report through your ESG reports at the end of the year, that's, you know, hopefully a transparent way of demonstrating some of this clarity and avoid some of the risks of greenwashing. Clearly, again, from a smaller business perspective, you know, I'll go back to this point of, like, you know, where are they now? How do they measure it? And that's a real challenge. So the point is about being able to get access to some data, either third-party data or their own data, to be able to understand what it is, set a realistic plan, and measure progress against it. And I guess my final point I'd say is, Lloyds Banking Group, we're signed up to something called the Net Zero Banking Alliance. We've talked about regulation here, and, you know, for me, you know, regulation, we can talk about, you know, government, but an alliance of other banks, and the impact on us means that we have to start publishing what that means. You know, so what are our commitments around the emissions that we effectively finance by lending to our customers today, and what are the pathways to net zero for the different sectors? We all know different sectors have got, you know, different challenges, but I think that's a helpful way of starting to unpick governance and greenwashing, by making it public, reportable, and people can measure progress. And I think the final thing I'd say, it's about a just transition. So, you know, depending on the sector that your business operates in, you can have very different start points from a sustainability carbon perspective. But the important thing is everyone makes some effort to reduce that, because frankly, sending the problem somewhere else, it is not really what this is all about. That's just, you know, saving the problem up for future generations. It's about making a start, however difficult that might be.
Is there a need for some kind of universal standards that everything can be measured on? Something like the ISO standards that the companies can sign up to and know when they have passed the right level? Is that what we're lacking, Glenn?
Probably, without sounding like sitting on the fence. But again, we go back to the point that Mark said, this is a complicated set of global problems that there's no definitive start and end point. So, but some sort of consensus around data, for example, some frameworks that are applicable to a country or to a sector, I think will be helpful. In terms of, one of the things our other research talked about was a 5-step plan. And one of those steps was frankly just learning off each other, whether you're in competition with these businesses, whether you're in the supply chain, whether you operate adjacent to them from a locality perspective. The importance of learning off one another to solve this is a greater need than the sort of the pure competition. And the second point I'd make around that supply chain risk, you know, without this level of governance, data, visibility, it's, people talk about scope 1, 2, and 3 emissions, and, you know, scope 3 emissions is really focused on those emissions that happen in your supply chain. And of course, for smaller businesses, they're really being impacted by this, because as the larger corporates are getting more familiar with the topic, investing in people, they're looking at their supply chain and saying, how green are their suppliers? And of course, for many of the smaller businesses, it's really difficult to evidence that. So it's critical. You could have a great business, great people, great product, great financials, but if you can't begin to tell your green or ESG story, you could very easily see yourself squeezed out of supply chains in years to come.
And that brings us on to Alistair, I suppose, in a way, because Ben's talking about learning from other businesses. And is that where you can come in and go, look, take a look at what these guys have done, and we can assist you to do similar?
Yeah, I think so. And the power of supply chains has been shown over many years to drive significant and quite fast change. So I think there is absolutely an opportunity to do that. But I think it has to be done in a way that recognises sort of maturity of the organisations in that supply chain and sort of helping them to accelerate and giving them the tools and the education. And again, large organizations have got the resources to share their own resources as opposed to just sort of mandating change. So I think there is a route down that path. The other thing I would say as well is that, as we've already discussed, ESG is very broad. And so I think needs to be recognition for smaller businesses around the importance of materiality. And you don't have to start by doing everything, but depending on how you're using the ESG and whether you're going to go down that investment route, like there's absolutely an opportunity for you to start by understanding which of these topics is most important and relevant for your stakeholders and then for your business. And you can create, a little bit of a graph within that, and the topics in the top right corner where you start. And I think that just by doing that and sharing that as a story starts to address some of the challenges we've talked about here. You don't have to be doing everything all at once.
Katrina, is that your experience, that you bite off a limited size chunk and start working on that before you start trying to spread it through the whole organization and tackle the whole ESG governance strategy?
Absolutely. I mean, when a business starts up, they're typically looking for that, that beachhead, and they're working on one particular issue. So there are particular elements of ESG which are most important to them at that point. And of course, as their business grows, as their products grow, they'll start reaching into other areas. But as it is, yes, they've just got to tackle that first bit. And I run something called the Green Entrepreneurship Forum within the Entrepreneurs Network, where we work specifically with businesses that are committed to sustainability, and maybe sustainability is part of their product. The things they're saying they need most are, one, more skills. There are not enough people here in the UK with the skills and knowledge we need to build the products that we need for the future. Two, it's around that quantifying what these terms mean so that they can qualify how good they are on those particular scales. And three, consumer awareness and investor awareness. We need those marks so that people can fit within them. And of course, for new people starting brand new businesses, once those marks are created, they can start from the ground up working within them. Of course, it's much harder for the existing businesses who might have been working to one model and then that model changes to this new mark, but we need to get started somewhere. So as everyone's been saying, we don't need to start with absolutely everything at once. We just need to pick out one area at a time and fix it. I think the other challenge we have is that businesses are afraid of being shamed because they're not working well in one area. So your business might be incredible in terms of equality and diversity and the structures within it, but it might be lacking in terms of supply chains. Well, we can't have that business being skewered because of their supply chain issues when they're trying their best in other areas and can adjust. So there needs to be a little bit more, I think, forgiveness as we go through this process. But until we have specific terms for specific issues, it's going to be very difficult to get everyone on board with fixing them.
You mentioned investors there. I mean, we know that individual investors are increasingly ESG conscious. I think it's 1 in 4 investment dollars is now flowing into ESG funds and ESG assets, and investments are rising from something like 4 trillion 10 years ago to over $12 trillion now. There's a massive transfer of wealth occurring from boomers through to millennials who have very different values and expectations. Is that what's fueling this? And we're clearly going to see more of it, aren't we?
I don't think it's what's fueling it. I think it's part of what's fueling it. But ultimately, I think the awareness everybody has about the challenges in our world is what's fueling it. So it's not just a generational thing. It is because these issues need to be tackled, and people of all ages and all stages know that they need to be tackled. Investors are looking at ESG, but they're still ultimately looking at the bottom line. And so the shift is happening because the shift of what's going to create a better bottom line is happening, as much as sort of the investors having a kind of moral compass, a higher moral compass.
If I can come in on that, John, I think it
I was about to say, because carry on, but I want to ask you a little bit about whether it does create value or whether there are significant financial risks too, but carry on.
Right. Just to wrap up a little bit of what we were saying, in addition, I think it's important to understand there's definitely if you like, societal expectations are changing in favor of this, as you pointed out, Katrina said, everybody said. I think what most people don't know, and in the spirit of, as you were saying, Sarah, education and awareness and all that stuff, there is a huge amount of work going on around the world. And the real driver is actually regulation. It's investor-based regulation. And this is the regulation I touched on some time ago. What the regulation is doing, it's tying up these three strands that we're talking about. It'll drive standardization. In Europe, there's a thing called, it's a boring word, but it's a thing called the EU taxonomy, which is essentially 21 things that big companies now have to report on. And as you said, Glenn, right through the supply chains or your lending chains or whatever. And so, Alistair, absolutely the supply chain point. So the regulators figured out supply chains are powerful. I'm going to create standardized metrics, which, by the way, the British and the Americans are all syncing up with the Europeans, and the Europeans are now talking to the Chinese on a global taxonomy, which is interesting. Okay, none of this is going to come tomorrow, but it's all coming in the next 2-3 years. And the critical final piece is that all those regulators have said, we will adopt new accounting standards. And this is the point that gets you to value and business sense, and why I think fundamentally it will change, because the International Financial Reporting Organization has created a new body to figure out how to make companies report on non-financial things in the same way and at the same time as they report in financial things. And from now on, they're going to go together. You're going to, effectively, the year end comes, you're going to put in two sets of accounts, one for financial and one for non-financial. That's basically going to happen. And it's all being organized by the world's accountants. So
and we've been talking about,
it is all coming.
But for the last 15 years or so, we've been talking about how data is now beginning to appear on your asset sheet. We're now looking at, your social governance factors coming onto an asset sheet as well, that you can simply print and go, look at this, we tick all these boxes.
100%, and that's your materiality point. The reason investors, yes, they're looking at the hard cold cash, of course they are, but they're also realizing, as Glenn said, these are huge risks in your organization, and therefore it's a risk to my hard cold cash. Therefore, if it's material to the business, it affects my potential to make more money in the future. It's something I want to mitigate and avoid. Now, one of the things not all the regulation has got to yet is that that's talking about the effect of the world on the company. Most consumers would think that actually an ESG score is the other way around. It's talking about the effect on the company on the world. And at the moment it isn't. And again, that's where you get greenwashing in the middle. That again, the regulation standardization is trying to stamp out.
But this is a really important point, because there is value in an implementation of an ESG strategy, but there are also considerable financial risks as well. I think if you look at some of the statistics, you're looking at companies with a consistently high ESG performance have something like 2.5 or more than 2.5 times the total return to shareholders compared to low ESG performance firms. But add to that, when your ESG performance is highlighted, or your lack of ESG performance is highlighted by the news media, there's some significant failures, whether they're related to data breaches or accounting scandals or sexual harassment. That apparently the latest statistics are talking about something like $500 billion of market value for a selection of ESG related events that were discovered by the Bank of America as ESG failures. So, there are two sides to this, and you have to be very, very careful about what you're doing to make sure that you are creating value and not losing value, surely, Mark.
Yes, I think you do, but I guess the answer to that is because I'm consciously managing it and reporting it in a transparent way, not just because I have to, but maybe because I want to, as Glenn was saying. And I think it'll lead to a better business, and my culture is better, and women feel safer in my company, and ethnic minorities do, etc. That's probably going to mitigate the risks to some extent, right? Now, is the risk any greater because I'm doing that? Then if I didn't do any of that, would the sexual problem, not come up anyway? Or was the fact that I'm stealing all the water from some lake not come up anyway? Or I'm pouring pollutant, So if I'm doing it anyway, it's still a risk. It's probably mitigated by being open about it and trying to manage it better. I mean, that's the theory really of ESG.
Sarah, how are you feeling at this point with your knowledge of ESG? No doubt increasing by the minute.
I was going to say much better than 30 minutes ago. That's good news. I think that it really leads back to, for me, what we're doing, and we're educating people who might want to enter this particular category, is just show what you're doing and try not to be afraid of talking about, you know, if you're doing the right thing in the wrong way, because it's highly probable that you're doing the right thing in the right way. So again, sorry, it does lead back to education, because I wish I'd had this webinar this time last year, or slightly before when I launched, and you know, I'd be able to embed it into a little bit more of the strategy. So, you know, simply by having this conversation, we will be helping some of those smaller businesses looking to enter this category. I think that in what I do on a day-to-day, I have to be very mindful of greenwashing, because ultimately I'm reading lots of, and a panel is reading lots of entry forms, and we have to make sure that they're substantiated, and it's not just a lot of words or a nice PR and marketing spiel that goes into the awards. So I'm very mindful of that and what I do with the awards.
Alistair, give us an idea of what happens when some of the smaller companies come to you for assistance. What sort of process do you go through?
So I think this ties back to your question around the financial risk as well. And I think from that, you know, from an investment perspective, we see that the research, the jury is definitely out on sort of the success of ESG funds, both from a financial performance perspective and from a sustainability perspective as well. Like, there's just not necessarily as neat a correlation as we'd expect between sustainability of companies in ESG funds and those in non-ESG funds. So I think when an organization comes to us with some sort of question around this, we want to start by saying it's the impact that reduces the risk. It's that the impact on sustainability and on the environment and for your supply chain and on your communities and on your workforce that creates the culture that leads to greater levels of innovation, of less staff turnover and less risk of, we talked about sexual harassment, other forms of harassment, for example, or it reduces the risk around your reputation or the costs of energy use or what have you. It's the impact that changes that. And so I think that is always our starting point. And I think it absolutely should be the starting point for pretty much every organization. And that comes from understanding, again, what's your purpose, which of these issues are most important to you, but also starting with the issues and recognizing that, you know, whilst this regulation is maturing and it will start to have an increasing effect on businesses, the wicked problems that we're facing, whether that's the climate crisis or the nature crisis or inequality or health and well-being or the cost of living, you know, the list goes on. They are the things that need to be fixed because it's the right thing to do. And those are the things that are going to be causing problems for businesses if they don't mitigate those risks. So I think it's starting with those issues and understanding what is it that your business can do given its current situation to either mitigate or to help address them, as opposed to starting from a place of regulation. After all, if we look for compliance, well, compliance will never be enough to address those issues. And then also, if you go for compliance, you miss the competitive advantage that comes from being a sustainable business. We know that being a sustainable business can, you know, increases innovation by up to 30%. It leads to greater relationships with your customers, your stakeholders, because most of us are at least aware or want to be aware of these issues, and it reduces the risk around reputation, what have you. If we just aim for compliance, you miss that competitive advantage. So I think for us, absolutely starting with impact, no matter what size your business is, and then just working out what's appropriate for you.
I'm going to ask this of Glenn and Katrina as well, but I'll start with you, Alistair. It's probably slightly unfairly because you don't have time to think now, but without giving too much away in terms of names and pack drill, give us an idea of an example of somebody who's come to you, who you've been able to advise, and how you took them forward. Because I think examples, we've been talking very generally here, but examples are really helpful for those people who are watching this video. And incidentally, a reminder that you are welcome to ask questions of your own if you have just joined us here on the live version of the webinar. If it's watching the recording, unfortunately, we can't make that happen for you, but the little chat section is open, so please do pose questions should you wish, and I will then speak to our panelists on your behalf. But Alistair, I've given you another 30 seconds to think about.
Yeah, I appreciate it. So we work with the network of sort of just over 600 businesses and trying to make all of them a little bit more sustainable, from, you know, large multinationals to startups. So if I suppose something we've been working on over the last couple of months has been with an energy provider, one of the national, kind of like the regional ones in the UK. And they came to us and sort of said they had a purpose, they had a bit of an ESG strategy, but it just wasn't fit for purpose. The regulator had come to them and said that they were lagging behind, they weren't producing the results that they needed. Equally, that was being reflected in the relationships they had with their employees, with their communities, and with their customers as well. And they recognised they were kind of increasingly at risk from an environmental perspective. And so they wanted to understand, where do they start? And again, this is an organisation that is highly regulated, that needs to be doing this in a very mature sector, and that has quite a lot of resources. But I think the challenges are common. It's where do I start, and where can I have the most important impact? The first thing we did was to understand what the purpose of that organisation is. Now, in our language, a purpose is the reason a business exists beyond profit and how that benefits society. So we went through a period of listening to senior leaders, the regulator, colleagues, communities, customers, competitors, other charities, and sort of saying, well, what do you think this energy provider should be doing in order to make a bit of a difference in society and to succeed as a company? That then created their purpose, which is very much around making sure that everybody has the energy in a way that is sustainable and that allows people and communities to thrive and to flourish, kind of unsurprisingly. But with that purpose, that then informed the rest of their strategy. And you could then start to think, well, if I apply that purpose to this business decision, or this product or service, or this group of stakeholders, so what? And it's just sort of, it's a nice way of starting the discussion that then trickles down. And you can see how that would then build up into a more complete ESG strategy over time. But that obviously takes a bit more time.
Thank you. That's a really useful example. Glenn, I'll come to you next. Give us an insight into how you've been assisting one of your clients to make all this work for them.
Yeah, so I definitely think client examples are really powerful, actually, because I think people can really learn from, as I said before, similar sized businesses or people in their supply chains. So I should just remind maybe people listen to the call, Lloyds Bank purpose, which was to help Britain prosper, which I think lots of people, whether you work for Lloyds or not, makes a lot of sense when you think about the ESG topics. And we've just expanded that to talk about, to be more sustainable and inclusive for businesses too. So this is right at the heart of, everyone at Lloyds Banking Group, not just people like me who have the privilege to lead on ESG for our SMEs and mid corporates. So purpose, I think, is really, really interesting from our perspective. And then, to bring it to life from some client examples, I mentioned before our Now to Net Zero report, and there's a 5-step plan, and you can read that on our website. But one of the 5 elements was this idea of heroes of net zero, where we try to play a convening role and just share case studies, whether it's through social media or on our website or the client's own channels, examples of where they've begun on that journey, and perhaps where they're, Lloyds have supported them with our green lending. So there's a couple of examples that spring to mind. So Island Delight is a fantastic business in Birmingham. They make Caribbean patties, and we've provided them with some green financing, which is included in, new solar panels to power their site, a waste to energy power plant. They've now got some green vehicles in their fleet. So, just increasing ways of making that business more sustainable, and they've got more opportunities and more things to do. But a good example of a relatively small business that's made a really compelling start.
What did they have to do? Sorry to interrupt, Ben, but what did they have to do to prove to you that they were worth that investment?
So that's a great question. It sort of goes back to your question around greenwashing. So we have a product called Clean Growth Financing, which, to try and give you an idea of the scale, we've earmarked or ring fenced 15 billion of that green lending for ESG purposes across the bank. That's our commitment, to try and support this transition that I talked about. And on purpose, we've kept the bar really high in terms of, what's eligible, what purposes can that finance be used for. So it's discounted both from an interest margin or an arrangement fee, depending on the size of the business. But there's various criteria that you qualify for, and if you don't, then you don't attract that type of financing. And part of that is to incentivize people to do the right thing, which we think, will mean that the business is more sustainable in the old sense of the word, that they're around in 5 and 10 years time by making these investments in their business now. So that's something we're doing, and I think the important thing is that we do lots of other lending, which is probably going towards green purposes, but we're very mindful of falling into the risk of greenwashing. So being able to track the purpose of the lending, make sure it's eligible, it's had some third-party independent verification, and the client is committed to it with, in terms of the facility documentation, so it can be monitored and tracked through the life of the loan. So, in 5 years' time, if someone was to audit that particular transaction, they can see that what the purpose was for, how it's made a positive impact, and how it's been documented. And then the second example I'd give, if I may, John, is was one of Sarah's award winners last year, which was Jude's Ice Cream on the Positive Social Impact Award. Again, I go back to our research, and the good news is there are a number of clients that are already in their mind at net zero, and I'm making this a bit of a mini crusade of mine to try and find out who these clients are and to go and meet them and learn from them, frankly, and try to understand how they've got there and share best practice. But Jude's is actually a carbon negative business, so they've got rid of their carbon. They are a B Corp listed business, and for me, the way I describe their business, they don't describe it, but they make ice cream. I think they're a sustainable business that happens to make ice cream rather than an ice cream business that's become sustainable, such as everything that they do at the core element. And it was just my final point, and this is one of my ESG directors quoted this, and he talks about ESG is not something else we have to do, it's part of everything we do. And definitely Jude's Ice Cream, when you hear them talk, when you see their operations, I think a fantastic example of what can be achieved.
Excellent, thank you, Glenn. And I'm going to turn to Katrina now and say, similar question, please. Give us some examples of how you've seen entrepreneurs succeed with their ESG strategy.
Well, I mean, the original question was around who we've helped, and I suppose I'm going to slightly reframe that, because the Entrepreneurs Network is a think tank. So our role is to gather ideas and feed them into Parliament and the government. So the work I've been doing in the Entrepreneurs Network is really convening people to talk about the challenges they're facing and what opportunities could be created for them by regulation and new government policy. And we've looked at all sorts of different areas and brought together fantastic groups of entrepreneurs with incredible businesses to explore these ideas and then report those back into Parliament. So, I mean, as I said earlier, we've looked at some particular areas around financing, around skills development. So, for example, the government has a scheme open at the moment where people can sort of retrain, but they could expand that scheme to offer more training in sustainable practices in other areas of ESG. And the types of people we've been getting along are really exploring all sorts of different things. So one of the challenges I have as a kind of layman in sustainability is they come together and they're talking about these really complex scientific kind of models and the things that they're putting together to ensure that they're starting from a position of sustainability. And some of the work we're doing is around this idea of sharing best practice. Some of our members have been coming together and saying, okay, we can work in this way. What if we partnered and did this? That way we could build out this new model. So I suppose our role is convening entrepreneurs, sharing best practice, and more importantly, feeding their experiences up the chain into government to try and improve regulation.
That was a good question on that. So, yeah, in terms of best practice from a startup perspective, do you think that the social enterprises as a business model has got a place? And do you think there should be like a starting point for entrepreneurs?
It definitely has a place. The challenges around the social enterprise are more around the way that they are set up. So the kind of financial element of it and the challenges around, okay, if I start a business, if I stick with it for X amount of time, that's however many years of my life gone. Well, it's a lot harder if something's, if it's limited by shares or limited by guarantee. So I think there's a massive place for it, and it has a huge opportunity. But the fact that the rewards for the founder are challenging and also the fact that it eliminates them for applying for some grants, for example, whereas a charity could apply for those. It's a difficult line to go down. So yes, I think it's got a really important place, and certainly it's kind of attractive to people when they're looking for somebody to buy from or invest in, but it is a challenge because they're not going to be able to get those same rewards for success.
Interesting. I appreciate that was a bit of a tangent, but when we talk about the most powerful small businesses from an ESG perspective, the ones always spring to mind to me are social enterprises like Numi Teas and what have you. Like their whole business model is around creating a positive impact. So just sort of useful to get your steer on that. Thank you.
I've come across, John, a couple of very good examples that I think might be helpful, if I may. So a lot of my research is being used by one company in particular, and they essentially assure, which is the accounting phrase for checking, auditing all this data. And they came across two really interesting examples, I think. One was for a company that made, they kind of assemble modeling kits out of clay, for fun things that companies use and adults use for parties and stuff, kids parties, that kind of thing. And we were looking at year-on-year comparison, they were looking at year-on-year comparisons, and the CO2 emissions had gone up hugely, even allowing for sales growth, which obviously they need to, because they're going to go up if your company grows, but they went up way disproportionately. And of course, the guys didn't know what had happened. And so they asked the company and they said, oh my goodness, we've just opened up the American market and we're still shipping everything out of somewhere in the Midlands, going all the way over to America. And the operations guy said, crikey, I could use the savings that of all that energy savings and all that stuff, but if I open up a depot in America to handle the east coast of America, and actually the savings will fund the depot, it'll be completely, and then my CO2 emissions will be going down. Now, the only reason he had that thought was because of the CO2 emission conversation, which is interesting. So it can be a stimulus to other business decisions if the underlying data is solid enough, like any good business decision. The other example, I think, is more on the marketing reputation side. This is a company, it's an Irish company actually, that resells boutique luxury items like handbags, for instance. And they literally connect the buyer and the seller. Okay, so they don't actually see the product, it goes from one to the other end. And they wanted to reduce their use of plastic and bad materials in the packaging. So they made it mandatory for all their suppliers to send stuff to their customers in recycled packaging. And then they asked the customers to report back if it had arrived in repackaging or in recycled packaging or not, which is a really clever way of policing the system, which they couldn't do otherwise, and really deepening the brand relationships with their customers. So I think they're two quite interesting examples.
Absolutely. I'm going to turn, because we are beginning to get into the last 10 minutes, I've got a couple of questions online. Kerry asks a question to Glenn, asking, could you talk a bit about aviation in terms of how Lloyds plans to report carbon emissions for their assets?
It'd be easy for me to say no. It'd be a much easier response. I'm sure it's not the response you're looking for. So I'll try my best. So I mentioned before that Lloyds Banking Group has signed up to the Net Zero Banking Alliance, and the implications of that we have to publicly disclose our sector commitments. Aviation, as everyone will be realised, is a big CO2 emitter. Clearly, since the COVID pandemic is easing and people are returning to global air travel, so that's falling within our transport sector work. So you will see that either later this year or early next year in terms of how we are thinking about the transportation sector in totality. And clearly there's some big subsectors in that. You're right to pick out aviation, shipping's another one, clearly. And then you get into road, and of course, the road haulage business, you have some very large businesses and some very, small, family-sized road hauliers too. So it's about going through all those subsectors too and make sure we've got appropriate strategies and commitments and plans and data that begins to talk about that transition journey I talked about previously. So you will see them in due course. And, as I said before, and I think Mark talked about, data and understanding it in consensus is a big challenge, not just for Lloyds Banking Group, but for anyone setting, a commitment and a plan around it. But it makes sense to us to start on those sectors that perhaps, are well recognised as being the biggest CO2 polluters. And certainly that's what the regulators, when, for example, the Bank of England asks banks to stress test, they use a common sense approach, and we focus on those sectors that are perhaps having the biggest impact. So there's no more specifics I can give you at this time, but it will be part of that series of Net Zero Banking Alliance commitments, and you will see that disclosed in terms of our ESG and TCFD reports, along with our financial report and accounts. And I think Mark said it earlier, frankly, they're getting as much, if not more, scrutiny by shareholders and investors as the actual financial results that we turn out. So that gives that level of transparency and commitment and year-on-year progress, and tries to avoid, some of the risks and the conversations we've had about greenwashing. But clearly, I guess the point I would make is that I would imagine for all sectors, all businesses, the road will be bumpy. It won't be straightforward. There will definitely be some easy wins, and there'll be definitely some difficult things to do, because as far as I can see, people like me still want to go on holiday, and that sometimes involves getting on a plane. So it's going to take some consumer choices changes to happen, and new technologies probably to get where we need to be over the next 10 to 20 years.
I'm sure that's not the last time you're going to be challenged on such things. Thank you, Glenn. And one other question from Andrew, who the second part I've been trying to decipher, so I'll try and make it as clear as I can. And I'll open this up to anyone who'd like to try it, and maybe Mark. What accessibility is there to carbon calculators for SMEs? And do we think access to industry standard calculators, and then goes on to, and support prohibiting adoption of ESG strategies? I think that means, do we think access to industry standard calculators supports prohibiting adoption of ESG strategies?
Yeah.
Mark?
I'm going to assume that's what you mean. I think the question is that, what's out there, what's available, and do they help or hinder, essentially?
Yeah, exactly.
If that's fair, John. Yeah, is that a fair?
Absolutely. Well, that's what I would take it as, but thank you.
So, Andrew, I hope I'm doing the right thing here, but off we go. I think I touched on earlier, there is a plethora of providers. Ever since the regulations have started happening, literally everybody who can program a computer has said, I think I'll start an ESG business. So there is a lot of very new companies in this space. It's very important to recognize that they are all unregulated, all of them, from the very biggest to the very smallest. There is no regulation in anybody who calculates carbon, okay? And that's an important factor. Hence, I think, why the regulators are saying, let's get some accounting standards to look at this, because accounting is not perfect, auditing is not perfect, but it's the best we've got at the moment. Of course, it makes mistakes, but it's a lot better than nothing. And at the moment, Andrew, the truth is a lot of providers that will help and offer to help SMEs, there are two kinds of things essentially happen from the work we've done at King's. One is they will end up asking you to do most of the work. You will have to figure out how to calculate your kilowatt. Katrina, I see you nodding. It's true, it's frightening. And then they show you the results in whizzy graphs and charts online, which you paid for. So actually you've done all the work they should be doing. But secondly, there are other ones who frankly are not using best scientific practice. And the one you want to look for is a thing called the GHG protocol. That is the official UN, if you like, backed method of calculation. It's a huge book, it's extremely complicated, and there are several different methods you can use. And you have to use different methods on different things depending on the availability of data. So it's worth, if you care, and I think you should, and you're going to have to because Glenn's going to make you care, and all your other customers are, then it's worth, and unfortunately you're going to have to put a bit of time into ferreting out good providers rather than just buying the easiest or the cheapest. And the ones who do general averages are probably the most dangerous of all. If I say to all the women on the call, the average pay gap means there isn't one, I think we'd be in quite some trouble, because I think averages are very dangerous and meaningless. So I hope that helps.
Thank you, Mark, and thank you for the question, Andrew. Our time is drawing to a close. So I'd like to ask Glenn and Katrina and Alistair the same question, if I may. And Alistair, I'll let you go last since you were good enough to go first on the putting you on the spot question. Katrina, what happens now? What is it? What is the biggest incentive to making all of this work that you want to see in terms of either governmental change or change of regulations? What do we need now to make this easier for everybody?
I think it's very, there's a very clear starting point, and it is regulation, making it clear what the challenges are, how we're going to measure it, and everything else can be built out from there. So if people understand what it is we need to achieve, then we can start training people in the skills they need to achieve those things, and so on and so forth. And I think the other side is the consumer awareness. Again, if we have those set regulations, set metrics, we can start educating people about why one business is better than another, and educating businesses about why they have to change to be the best business. I think it all starts from that point. We need to clarify those terms. And I will just add one last thing, because I was getting very excited when Glenn was talking about the fund and how that all works. And I think that particularly for service providers, so lawyers, banks, etc., the sort of ecosystem around startups, there is a massive opportunity right now to become leaders in that area, to be the people who can say, okay, guys, this is what you need to do, and this is how you do it. I think it would be, it's just very exciting when you hear about organizations who are really taking this into their core, their own core value system and what they're doing, because those are the people who will be able to enable entrepreneurs to create the changes in their organizations.
And clearly, Molly, my dog, agrees with you in that instance. And apologies for the interruption. Glenn, what's going to make this all easier? What's going to make this simpler for everybody who's watching this webinar, where this does not feel like a huge headache? Because although we've talked about it and made it sound very much more accessible than it was, I think, an hour ago, it's still something to invest in that costs time and money and staff.
Absolutely, John. I'd say two major points with a couple of sub points in between really quickly. So I think the call's been brilliant, by the way. Great panel. I think we talked about some challenges and we talked about some opportunities, but just to finish on the bit of a positive in terms of the opportunities, in a world of inflation and energy costs, having a good ESG strategy can actually help you save money when people need to make cost savings. So I think that's the first one. So it's not an either or, it's an and conversation. The second one is that we're all requiring people to help us run and lead and operate in our business. And increasingly the recruitment and attention of talent is increasingly going hand in hand. It's not just millennials. Many people are searching to work for businesses of all sizes that have got some true ESG credentials that they can validate and support. So that talent and people and labour shortage can be addressed by an ESG strategy. And the third thing, I think as consumers, certainly I feel since I've been doing this job more and more so that, I'm more informed and making some better choices, not always perfect, but better consumer choices. So there's some opportunity, and I will pay a little bit of a premium if I can understand that I'm buying from, a more sustainable or ESG centered business. And so I think there's some opportunity upsides for us. And then in terms of, where should we go from here? And it's in those 5 parts of the plan I've referenced in our No to Net Zero report. So I've talked about getting started. The second one is there are some things you can do really quickly, short-term wins about reducing your energy, improving your recycling and reducing your waste, etc. We've just been talking about carbon calculators. So engaging with one, we have a green buildings tool, for example, to begin to measure and monitor what you're using and make some plans off that data. And then just keep navigating the road ahead. And I think the final point is, and hopefully this webinar is a great example of this, learning from one another.
Glenn, thank you. Alistair, same question to you. What's going to make your life easier, and indeed those businesses that come to business in the community for help, what's going to make them smile a little more?
Well, I think regulation, technology, data absolutely will make life a little bit easier. But if I'm being provocative in the last minute of this, I'd say it's an excuse. We've had businesses that have been sustainable for decades, generations, and over the last year, we know that the global extreme poverty rate has risen for the first time in 20 years. there are millions, hundreds of millions more children that have fallen below the minimum literacy rate. The climate crisis is here. Gender equality is moving backwards. These issues need to be tackled now. We don't need to wait for more data, more terminology. I think businesses can absolutely feel as though they can go away from this webinar right now and make a bit of a difference. It will get easier, but we don't have to wait. We can start right now.
That's a really good point, Alistair. Thank you. So, Sarah, how are you feeling at this point? Are you now a sustainable business and signed up and ready to go?
Do you know what? Well, this conversation has made me realise that I am doing some things that I didn't necessarily recognise were part of this discussion within my business. So I think, and that leads back to why we've done this, because what we can do through the British Business Excellence Awards is that we can celebrate the good. And like you've just said, Alistair, you know, you don't have to wait. You don't have to wait to prove that you're doing it, because actually, again, like I've just realised, I was already doing it without realising. So let's bear that in mind. To everyone that's been here today and everyone who possibly watches this or listens to it on the train journey home, we look forward to reading all of the ESG Champion of the Year award entries that will come flooding in. We have made a commitment ourselves. We have our ESG Champion Award. We also have our Lloyds Bank Sustainable Business of the Year, and also the Purpose Before Profit Award. So there's many categories across the awards program that hopefully should suit your business and allow you to scream and shout about your successes and put yourself on a national platform. So I want to thank all of my panelists today and our wonderful host, John and Molly, for helping out today. I apologise for my coffee machine in the background here, which might be making a bit too noise and certainly wouldn't pass any ESG credentials there. So thank you so much. We look forward to reading all of these entries. Thank you, everyone, and we'll see you soon. Bye-bye.